Hello everyone, welcome back to my YouTube channel. Today I am going to discuss the concept of the valuation of goodwill, that is the valuation of goodwill under super profit method. All of you know here what is the super profit. The super profit means here the profit earned by the company over and above the normal profit. If the company is to be earned more than the normal profit, that should be called as the super profit. In other words, it is the difference between the average profit and the normal profit. Here, obviously, if the company's earning is to be more than the normal profit, then difference amount is to be called as super profit. Then how to find out the super profit here? Super profit equals to average profit minus normal profit. Then the normal profit equals to average capital employed into normal rate of return divided by 100. This is the formula for calculation of normal profit. Then the average capital employed is to be ascertained by any one of the method. There are two methods is to be applicable here. One is to be asset side approach, then second one is liability side approach. Either you have to choose first one or second one. Then how to find out the average capital employed under the asset side approach? Here, first you have to consider the market value of the assets. The market value of the asset is nothing but the realized value. In case of the realized value, if the realized value of the asset is not available, then you have to consider the book value for calculation of average capital employed. Here, all the assets should be considered. All the assets should be considered, and here, except the goodwill, preliminary expenses, the losses. It means that here the fictitious asset should not be considered under the market value of assets. Then less outside liability. All of you know here the outside liabilities, it may be the debentures, creditors, bills payable, bank overdraft, or provision for tax. And here, in addition to this one, if any non-trading investment or the non-trading profit is to be given, that should not be included in the asset. Market value of assets only, goodwill, all the assets should be considered except the fictitious assets. Then outside liabilities means debentures, creditors, bills payable, bank overdraft, then provision for taxation. And here, if any non-trading investment is to be there, it should not be considered. In the absence of the realized value, you should be considered the book value of the assets. These are the hints for calculation of average profit. And here, after deducting the outside liabilities, you have to deduct half of the current year profit. The latest of the profit is to be given here. On that, 50% is to be deducted, and whatever the balance is to be available, that should be called as the average capital employed under assets approach. Then next one is there the liability side approach. Here, the liability side approach, first you have to consider the owner's capital and the reserves. Here, equity share capital, preference share capital also called as owner's capital, then reserves and surplus, that is the profit and loss account. And here, in case any profit on revaluation of assets, you have to consider. Then less, that is the goodwill. Then profit and loss account, that is the loss debit balance of the profit and loss account. Preliminary expenses, in case any loss on revaluation of assets, you have to deduct. Then half of the current year profit is to be deducted, then you will get average capital employed. Either you have to go through the asset side approach or liability side approach. Either you have to choose any one method, either asset side approach or liability side approach. Then there are sub methods for calculation of value of goodwill under super profit. Then first one, purchase of super profit method, sliding scale valuation of super profit method, annuity method, then capitalization method. The sliding scale is not to your syllabus here, that's why only I want to discuss only the rest of the methods here. The first one, purchase of super profit method. Under here, while after calculation of the super profit, under the purchase of super profit method, you have to consider number of years of purchases. While calculation of the goodwill, you have to consider the number of years of purchase. Here, under the purchase of super profit method, value of goodwill equals to super profit, that is average profit minus normal profit, into number of years of purchase. The number of years of purchase is to be given. On the basis of this information, you have to calculate the value of goodwill under purchase of super profit method. Then second one is there annuity method of valuation of profit, valuation of super profit. Under this here method, by considering the annuity value, it should be like calculated figure on the basis of the present value, and here the value of goodwill equals to super profit into annuity value. And here annuity value, this method is to be takes into account the time gap between the actual payment of goodwill amount and the actual earnings which is to be generated in future. Therefore, the present value of super profit is to be calculated for finding out the value of goodwill of the business. In order to ascertain the present value of the goodwill, the present value of annuity for rupee 1 is to be considered. That is why the value of goodwill equals to super profit into annuity value. Then third one is there the capitalization of super profit method. Under this method here, the value of the goodwill of the business is to be ascertained by capitalizing the amount of super profit. The value of goodwill, for calculation of the value of goodwill, here the super profit is to be capitalized by considering the normal rate of return. Here this method is to be used to find out the amount of capital needed, how much capital is to be needed for earning the super profit. This method is to be based on the assumption that super profit will be continued for indefinite period. There is an assumption in the capitalization of super profit method, that is the business or the super profit is to be continued for indefinite period. It should be the longer period. And here the amount of the goodwill is calculated is maximum one. And here for calculation of the super profit, for calculation of the value of goodwill under the capitalization method, the following formula is to be used, that is value of goodwill equals to super profit into 100 divided by normal rate of return, that is the capitalization, right. This is the theory concept of the super profit method. Thank you all.